Congratulations, you passed. After years of textbooks, practice exams, and sacrificing weekends, you finally earned those 3 letters, CPA. The interviews were relentless, but you outperformed dozens of candidates. Now you're stepping into a global accounting firm with a $50,000 signing bonus and a $90,000 salary. You ride the elevator up to the 48th floor on your first day. The skyline stretches endlessly outside the glass. Your desk isn't a corner office, but it's close enough to feel like a preview. You tell yourself this is just phase 1. The next 5 years disappear in a blur. 80-hour work weeks, coffee at midnight, conference calls at dawn. You learn quickly that high-level accounting isn't about math, it's about narrative. It's about shaping how numbers tell a story. You master the art of optimization. You set up layered holding companies in Delaware. You study international tax treaties. You shift assets through jurisdictions with friendlier laws. Cayman, Cyprus, Luxembourg. Everything is technically legal, structured, documented. You're not stealing. You're rearranging. Clients love you because you save them millions. Partners love you because you generate fees. Your bonuses grow. You upgrade to a glass-walled condo overlooking the water. You buy a watch that costs more than your first car. From the outside, you've made it. But ambition rarely stops where comfort begins. Then comes the turning point. A major client is about to announce disappointing earnings. The numbers are accurate but ugly. If reported as is, their stock will plummet. Investors will panic. Your firm's relationship with them could fracture. No one explicitly tells you to manipulate anything. They just ask whether there's flexibility. You review the financial statements again, revenue recognition timing, expense categorization, deferred costs, accrual assumptions. There are gray areas. Accounting has plenty of them. You shift a few expenses into the next quarter. You adjust depreciation schedules. You reinterpret a policy in the most aggressive way, defensible. On paper, it's arguable. In reality, it's engineered. The quarter closes, the earnings call happens, the stock holds steady, the client is relieved, the partners congratulate you. You just preserved billions in market value. You also crossed a line. At first, it feels like a victimless tweak. No one was directly harmed. The company will make it up next quarter anyway. But something changes in you. You felt the power, the realization that financial reality is flexible if you're bold enough. The next time, you don't hesitate as long. Then again, each adjustment becomes more creative, more complex, harder to untangle, until someone notices. A senior partner calls you into a quiet office, calm tone, no accusations, just concerns. An internal review is launched. Your system access is reduced. You're not fired, but you're frozen. Your license isn't reported to regulators yet. You're suspended in professional limbo. You can't apply elsewhere. Your name is quietly flagged within the industry. The mortgage in your condo doesn't pause. Bills still arrive. Weeks drag on, savings shrink, you sell the watch, then your phone rings, unknown number. A smooth voice says, "You're very talented at making financial problems disappear. I hear you're available." The meeting takes place in a 24-hour diner at the edge of town. The man across from you doesn't waste words. He slides a prepaid phone across the table. "I represent someone with a liquidity issue," he says. "Too much cash, not enough legitimacy." You don't ask what kind of business produces that kind of problem. He mentions your pending license review. "It would be unfortunate," he says, "if that dragged on indefinitely." You understand. An hour later, the burner phone lights up with an address, a storage unit near the interstate. Inside are shrink-wrapped pallets stacked with cash. 20s, 50s, millions upon millions. Rough estimate, $10 million. Another message buzzes in. 7 days. Clean it. You sit in your car, heart racing. You're a CPA, not a criminal. Then your brain does what it's trained to do. Break the problem down. Phase 1. Structure. You form multiple LLCs across different states with strong privacy protections. Each has a distinct purpose: on paper consulting, logistics, import-export, intellectual property, separate registered agents, separate addresses. Phase 2. Banking. You open business accounts for each entity at different institutions, different cities, different compliance departments. Now the hardest part, the cash itself. Large deposits trigger automatic reporting systems, so you avoid large deposits. Instead, you divide the money into smaller increments, distributed, repeated, spread across accounts over time. It's tedious, logistical, risky, but within days, the physical cash is absorbed into the banking system. It's not clean yet, it's just digital. Phase 3. Layering. You create contracts between your own entities, consulting agreements, licensing deals, supply contracts. Money moves from one LLC to another. Domestic transfers become international wires. Funds pass through holding companies, then into offshore trusts. Each movement generates documentation, invoices, memos, paper trails that suggest commerce. The money doesn't sit still long enough to raise suspicion. It dances. Finally, phase 4. Integration. One of your entities issues a legitimate loan to a real estate venture. Secured. Interest-bearing. Structured. Interest-bearing. Structured. That loan becomes a down payment on a commercial property. Now the money exists as bricks, leases, tenants. The transformation is complete. The phone rings. The client is pleased. Your next meeting isn't in a diner. It's aboard a private jet. You're blindfolded during the flight. When it lands, you're escorted to a sprawling ranch estate. The man who greets you wears jeans and a polo shirt. Casual, calm, powerful. He introduces himself simply as El Jefe. He thanks you personally. Then he offers you something unexpected, a position. This wasn't a one-time task. It was a test. You are now overseeing financial operations across multiple countries. Your new role is 24/7. You dive into trade-based financial strategies, over-invoicing shipments, under-invoicing exports, phantom inventory transactions. You acquire stakes in cash-heavy businesses, casinos, nightclubs, car dealerships. Cash becomes chips. Chips become checks. You explore high-value art markets, assets whose price depends on perception. A painting purchased quietly is later sold through intermediaries at a dramatically inflated valuation. You enter digital asset markets, wallets, exchanges, complex webs of transfers that span borders instantly. Your lifestyle evolves accordingly. Penthouse apartment, personal driver, chef, security detail. Under your bed sits a travel bag packed with cash and multiple identities. But luxury comes with isolation. You distance yourself from family for their safety. You don't form friendships, associates only. You vary your routines constantly. Rotate phones weekly. Scan vehicles for tracking devices. Every unfamiliar car feels suspicious. Every unexpected email feels dangerous. You are indispensable. You are also trapped. You know where every entity is formed, every account is opened, every trust is structured. If authorities ever connected the dots, you'd be the bridge. Then comes the mistake, a small clerical error in a transfer reference number. You correct it quickly. But somewhere a compliance officer flags the inconsistency. Routine inquiry. Just a form, but cracks rarely begin loudly. Your handler notices you're uneasy. You check your emergency bag twice that night. Days later, a message arrives from a number you thought inactive. We need to talk. Back to the diner. Same booth. The original contact sits waiting. You've done extraordinary work, he says. You're valued. Then he explains global enforcement efforts are becoming more sophisticated. Data sharing, advanced analytics. You're connected too much, he says calmly. If pressure builds, you become leverage. He slides a one-way plane ticket across the table, new passport included. You're relocating to oversee operations elsewhere, a jurisdiction with favorable laws. It's described as expansion. It feels like containment. What if I decline? You ask quietly. He smiles. You've been part of this family for years. Family doesn't step away. You stare at the ticket, and suddenly you see the full arc. It didn't start with 10 million in a storage unit. It started with a small earnings adjustment, a tiny shift in timing, a rationalization, one grey decision. You walk out of the diner, a black car waits. You don't return to your penthouse. You don't retrieve your emergency bag. As the city fades behind tinted windows, you realize the truth. You are no longer an accountant. You are no longer in control. You are an asset on someone else's balance sheet, a liability if exposed, a resource if obedient. And somewhere, in a system far more powerful than the one you once audited, your name is being moved into a different column.